I'm so glad you're with us on the Clark Howard Show. You know why? So we can get empowered together with knowledge that will help you pack a punch in your wallet. Because my goal is to help you keep more of what you make. Follow me at Clark.com. We got all kinds of stuff for you updated throughout the day that will help you stretch every dollar. Coming up in just 20 minutes in today's Clarkrageous Moment, how'd you like to be falsely accused of a crime, but be able to make the problem somewhat go away by just paying money? It is really Clarkrageous. I need to tell you what you need to be aware of that's going on as you're out and about. And a half hour from now, when you travel, I got some good news for you. Ways that you can speed up your travel. One in particular that's free. And I got more good news for you. This is the good news time on the Clark Howard Show. Fidelity Investments, which is a giant investment house, has been looking overpriced lately compared to its two arch rivals. Because Fidelity, Charles Schwab, and Vanguard are the three bigs of low-cost investing. There's a fourth, smaller one that's a great company called T. Rowe Price. But Schwab, Fidelity, Vanguard, humongous. And of late, Fidelity's been looking like a weakling, as Schwab and Vanguard have been growing quite nicely. Why? Because Schwab and Vanguard are offering ultra low costs on investments. Schwab has a series of funds that come under the general title Schwab ETFs, which are kind of like a modern mutual fund that make it very, very, very inexpensive, almost free for you to invest. Vanguard, the king of the hill when it comes to low cost. And finally, Fidelity's like, wait, we want in on this too. So we got a big-time price war going on among the big three, and Fidelity may have leapfrogged the other two with extremely low costs on a group of Fidelity funds. There are more than 24 that the ultra-low costs apply to. They're big company funds, small company funds, total market funds, bond funds, you name it. Really, really a variety of funds that you can save a lot of money on your investing. Because ultimately, over time, it's not having some genius stock picker that matters. What matters is the cost for managing the investments you're in. I'm a big believer in just owning pieces of a stock market. What's often referred to as the total stock market index or broad market index or names like that, where you own little pieces of thousands of companies across America. It's the easiest ticket into you becoming an investor. And to keep the costs very low with no commissions, because with Schwab, Fidelity, and Vanguard, there's no commissions on these ultra-low investments, ultra-low-cost investments. And then they end up charging you basically almost 0 pennies on each dollar that you invest for managing the money for you. So at my investment guide at Clark.com, I've updated the information for you for the latest, greatest on the low costs available now from no longer a 2-horse race, a 3-horse race with Fidelity, Vanguard, and Schwab. And it all depends on which one best meets your overall needs. And it doesn't have to be something, well, but you'd have to pay a lot to invest with them. None of that. Because the reality is, in the investing world, if you want to get your wallet clobbered, you invest through a full commission stockbroker. They're like dinosaurs, but they still exist, and there are still people using the dinosaurs, paying them massive fees to handle their money, and at the same time, to add insult to injury, they're not even legally required to do what's in your best interests. So it's your choice. Do you want to fund their retirement or yours? Do you want to fund your financial security or theirs? Derek is with us. Hello, Derek.
Hi, how are you doing?
Great, thank you, Derek. How can I be of service?
Well, my grandpa listens to you often, and he told me I should call in and get your advice on a vehicle warranty. He told me you're not exactly a big fan, but I guess I kind of wanted to give you a short story of my situation here.
Okay.
When I graduated high school about 5 years ago, I purchased a used vehicle. It's all I could afford. I was working a full-time job. I was going to school full-time also, so I figured I'd take out a extended bumper-to-bumper warranty that they offered me. It was through a private company. It cost quite a bit of money, which was about $4,000, but I figured since I was going to school a lot, doing a lot of driving, didn't exactly have money, it would be a good deal for me. So I got it. And, of course, I had problems with the vehicle, and every time I had a problem with the vehicle, it was never covered. They always told me that the parts were out of, the normal wear and tear, but I bought the vehicle with, 55,000 miles, and they said at 40,000 miles, those parts were no longer covered. So I didn't understand how they could sell me a warranty.
Oh, all they did was they stole your money.
Yes, exactly.
Yeah.
So there was nothing I could do about it. I tried taking it to court, but it was going to cost me more money in the end just for legal obligations and stuff like that.
Well, I can tell you with those private warranties, you would have never collected a cent, even if you got a judgment.
That's basically what my lawyer told me. He said, you can keep going, but he goes, the chances of you getting anything are slim to none.
I mean, basically, as a young guy, you got ripped off, plain and simple, on that used vehicle warranty.
So I pretty much wrote it off, and I needed to get another vehicle, and I'm doing financially okay, but to get a new vehicle, it still wasn't within my ability. So I traded in that old vehicle, and I got a newer used vehicle. I had far less miles on it. I bought it with 28,000 miles, and I did not take out a warranty. They offered it to me. I said, you know what, no, I'm going to steer clear. Well, not too much longer after I purchased it, I ran into a problem. It was an electrical problem, and it was going to cost almost $1,000 with parts and labor to fix out of my pocket, which it's kind of hard for me.
Derek, I am never letting you recommend any car for me to buy.
Exactly.
Wow.
So what they did is they helped me out. They said, we'll go ahead and we'll fix this for you, but we're not going to keep doing it in case there's any future repairs. So they said, why don't you look at getting a lifetime warranty, which they offer. They're not a private company, and the only thing is again, it costs quite a bit of money, which is $3,600, but it's lifetime for the time that I own the vehicle. So there's no dates, no mileage, nothing. It's bumper to bumper. They swear up and down that it covers everything. Well, I'm kind of leery now because I got kind of screwed out of the last one.
Right.
So I guess I kind of wanted to get your opinion, I guess.
Well, my thing on the car warranties is I'm neutral. I'm opposed to every other form of extended warranty that exists except for car warranties. And the reason I'm neutral on those is most of us aren't in a position that if something really goes wrong with our vehicle, that we can come out of pocket with the cost of repairing it. And the car ones, if you do buy one, you only want to buy the manufacturer's own warranty.
Okay.
But even the price that you're being quoted is negotiable. You can go on the web and you can shop around where dealers bid against each other for the business of selling them.
Really? Okay.
And so, and $3,600 is a lot of money. That would cover a fair amount of repairs on a vehicle. So I can't tell you, jump in with both feet again this time, especially when you're looking at $3,600.
Okay. So where
exactly when you buy your next vehicle, I want your first purchase to be the April issue of Consumer Reports magazine.
Okay.
And stick strictly to the list of the vehicles that have the most reliable records of repair.
Okay.
So that hopefully you'll buy one that won't end up needing so many repairs as you buy your third vehicle down the road. Jacob joins us. Hello, Jacob. How are you?
I'm doing well. How are you, Clark?
Great, thank you. Jacob, what's going on?
Well, I had received a call actually today from a debt consolidation company. I had not signed up for any anybody to contact me from a company like that, and I had also signed up on the Do Not Call registry just back in January. I was wondering, since I hadn't asked anyone to contact me for that, and they were getting into real particulars about my debt and everything.
Right.
What the rules and regulations were about that.
Well, let me first tell you that there's a really good chance, based on other callers I've heard from, that the people who were calling were actually scamsters trying to get personal and account information out of you to then engage in acts of identity theft.
Okay.
That it may not have been, I mean, it is possible, and I'll talk about the other scenario in a second, but the greatest possibility is that they were just using that for what's known as pretexting. Pretexting is a term in the scam industry where somebody impersonates either a financial institution or calls you under false pretenses for a financial quote-unquote service and then gets you to give them information that could cause all kinds of havoc in your life. What kind of stuff were you being probed and asked?
Oh, I was asking how much unsecured debt I had, how much total debt, what kind of, which banks or cards I had with that debt.
And had they gotten to asking you account information, like specific account numbers or anything like that?
Well, I'd gotten suspicious when they started asking about the actual amounts. I didn't feel, I mean, if anybody has any little number, I feel is enough to pry even farther into my identity. So I told them I didn't need their services or whatnot, and I checked out their phone number and online and called it back, and it came up with that company.
Okay. All right. So then that presents good detective work on your part. That presents the second possibility, and that is these companies parading as debt consolidators. That's not what they do at all. What they do is they prospect and try to find people who have excessive levels of debt, and then they try to convince you that you should pay them thousands of dollars to go try to negotiate reductions in the amount of debt you owe. And that is also a slimy business. The difference between the two is that one is an out-and-out criminal act. The other only may be. But in either case, do you know the good part about that phone call?
No, not really.
Well, I'll give you two good parts. One, you called and gave a heads up to your fellow listener. And two, you didn't give these people any information that would make it possible for them to visit any harm on your life. So you should feel good on both scores.
And I do.
And I appreciate you calling with it, because anytime we can help each other stay out of harm's way is a good thing. The Clark-rageous moment is here to protect you from people who might rip you off. Today's Clark-rageous moment, though, is really unusual. I need you to pay close attention.
Scams, rip-offs, outrages. It's a Clark-rageous moment.
Shoplifting is something that eats into all our wallets, and it's a big problem for retailers. Most of it is criminal rings that will get insiders employed by a retailer, and they work insiders and outsiders to steal enormous amounts of money and merchandise from retailers, known as shrinkage in the trade. But retailers facing the threat of shoplifting have in some cases become unusually aggressive. There are reports from around the country of shocking things going on at retailers installing jail cells inside areas of their stores, hidden from the public. When they detain somebody as a shoplifting suspect, they put them in the jail cell. They are interrogated repeatedly, aggressively, threatened, intimidated. And here's the thing. A lot of people are being put into this situation by mistake. What appeared to be somebody shoplifting may not have been at all. And people are being intimidated and told that they can avoid prosecution in return for signing a statement admitting guilt and paying huge fines, in many cases in the thousands of dollars. If you are ever detained at a store and they start doing that intimidation route with you and say, well, you better, you say, no, I didn't steal anything. And if you think I did, you call the police right now. You got to let them know that they need to rethink what they're doing. And do not allow anybody to put you in their fake jail cell inside a store and then intimidate you. You're not advised of your rights. You're not given access to counsel. It is private policing at its worst. Far be it from me to say that shoplifting isn't a problem. Shoplifting is a problem. And retailers face a constant fight to remain profitable. But having your own private jail cells and trying to intimidate people instead of letting the law handle it is 100% completely, totally Clark-rageous. Stand up for your rights.
A great business needs a stunning website. And with Wix.com, you can do it all by yourself. Wix.com makes it easy to look amazing online, no matter what type of business you're in. Show off your images in a beautiful gallery. Grow your contact list and get all your social media in one place, just the way you want. Your customers are going to love it. So, what are you waiting for? Show the world what you can do. Go to Wix.com and create your stunning website today. It's easy and free.
I'm so glad you're with us on the Clark Howard Show, where you learn ways to save more and spend less, and don't let anybody ever rip you off. On the web, Clark.com gets it done. And we got a question for me, Clark.com/ask. I hate standing in lines. I hate standing in lines. So reports coming in from around America, if you take a trip outside the United States, when you come back in, that you could be spending an hour or more in an immigration line after you've taken a long flight, probably in crunch class, across an ocean. Well, that is terrible. So there's something you can do for free that may eliminate a long wait for you. There's now an app that you can download, costs nothing, for your Android or iPhone, that the federal government has put together called Mobile Passport. And so you download it, and then when you're flying back into the country, instead of doing one of those paper immigration forms, you do the form right on your phone. And then when you land and your phone comes live when you've landed back in the United States, it transmits the information from your form to Customs and Immigration, and you go to an express line and you almost walk into the country. It's not as easy as the program you have to pay for called Global Entry, but it's a really, really great thing. And the reports that I'm hearing is it's getting people through in a couple of minutes, even in situations where the lines could be forever. So as far as being able to use this app, it's not at every single entry point airport yet, but it's at most of the busy ones in the United States that you can use the Mobile Passport. And it's a great, easy, simple way for you to save money and get yourself back in. All right, so let's say you fly regularly and you've done the pre-check thing, you did Global Entry, so you're in the supposedly shorter lines at the airport for security, which has been such an issue over the last few months, not so much in the last few weeks. Well, now there's a privatized thing that was around, went bust, has kind of popped back up, and is now growing again, called Clear. And Clear uses biometrics to expedite you in security at the airports. It's opened up, and they're opening up quite a few more. And Clear is very expensive, and you have to pay for it on top of paying for global entry or for pre-check. But what it does is it gets you to the front of the line. And you have a valet that carries your stuff. Our producer, Krista, is a member. And it's really funny because she'll just go to an airport that has the Clear pylon. She goes there, they read her biometrics, and then the valet takes her stuff up, and she's through security, walking past even all the pre-check people. Bam, she's in. Leave it to our producer, Krista, to have the easiest, quickest, most expedited way to do something. But now, people that are Delta people that fly Delta a lot are getting Clear, that's normally a very expensive membership, for free if they have high status on Delta, to typically $79 if you have moderate status on Delta. If you're just a member of Delta's frequent flyer program, SkyMiles, you have no status, it's $99 versus the normal $179 membership. So if you want to get through in a hurry, I got these two things. One costs you nothing. The other can cost you a fair amount. But in either case, I'm going to put time back in your life. I like the free one better. So I talked about crunch class, right? Being crammed into the plane. I have some good news for you. That's also related to Delta. They have ordered a plane that is specifically designed from the ground up. It's known as the C-Series jet, that was built to have wider coach seats, where in coach, so many people sit. Like, I fly a lot on the 737, and I've got a normal BMI. I'm not someone who's spreading over the seat at all, and it's tight on that 737. The seat is only 17 inches wide. It's ridiculous. Well, this new C-Series jet has been made with much wider seats in coach, recognizing that, well, we've gotten heavier, we've gotten bigger, and we got to have more room. And then they did something I really love. The middle seat of the three is even wider, because the middle person, when you got the person in the window, the person on the aisle, the person in between, the person in the middle is in a squeeze play, getting squeezed from both sides. So they made the middle seat even larger. So it's virtually, the middle seat is as wide as a lot of first class seats are. Brett is with us. Hi, Brett. How are you?
I'm doing good, Clark. How are you doing?
Great.
Real quick, what I was calling you about today, Clark, I recently received a call from a person who was pretending to be a representative of my local internet service provider, talking about a payment that was past due, which was true, and they had all my account information, so I scheduled a one-time payment with them. Well, a couple days later, I checked with the internet service provider because I hadn't seen anything post, and they had told me they had no record of anybody giving me a call, anything at all. And so I basically went ahead and paid them over the phone. And all
right, now wait a minute. How possible is it that it was a legitimate phone call and it's just that your internet service provider messed up?
It's not possible, because with repeated follow-up calls with my bank and the internet service provider, somebody had called in an hour before me today who was not authorized with any of my information or on my account, and made a payment with all my account information, pretending to be like they were me or authorized on my account.
Really?
The internet service providers checked all the records, and it was confirmed that it was a female who had made the payment, and so somebody just got my information, all my credit card and social numbers, the whole nine yards.
They got your social security number too?
They got the last four of my social, not the full thing.
Well, I hate to tell you that most criminals with the last four digits of somebody's social security number can usually piece together your whole number.
Well, that's what I was worried about.
So you've got some serious homework to do right away. First thing is you've notified the credit card company.
And stopped the credit card, canceled it and everything. And it's actually a debit card, so I've already stopped all that.
All right. Now, had any other transactions occurred yet that were debiting money out of your account?
Not yet.
Okay. Monitor your account closely over the next 24 to 48 hours, because sometimes if the card number is presented in a way as a credit card instead of a debit card, those charges or debits could lag, and then that money would come right out of your checking account. Now, if money comes out, you can go into your bank immediately and fill out a debit dispute form, and under the rules that the banks have adopted, in supposedly 5 days, your money will be restored to your account. But 5 days in their world is a week. It's 7 days.
Okay.
So that would be one step. You've gotten that started. Second step, because you gave out the last four of your Social Security number, you need to file a police report right away.
Okay. Does there need to be any particular jurisdiction?
It's the jurisdiction. It's the jurisdiction where you live.
Okay.
And sometimes the police are not cooperative with this, but there's a federal law called the Identity Theft and Deterrence Act that a local police department is required to issue a police report for you as a victim of identity theft, and you are allowed to self-report. Okay. That then leads to the third step, which I can't believe how much this has come up just recently on our show, but the third step is that you want to freeze your credit. Mm-hmm. And with the police report in most states, that will allow you to enter the process of freezing credit for free. Go to Clark.com. I have the 50-state guide links for credit freeze, and you'll be able to see what the rules are for you in your state.
Okay.
And then you'll be able to freeze your credit, likely for nothing. When you need to thaw it, because you have the police report designation, you will be able to thaw it for free. The way this works is you'll be assigned a secret code by each credit bureau, and with that secret code, a criminal who has decoded your social and all that information won't be able to open new accounts as if they're you, because they won't have your secret code. The crazy thing is, do you know if a criminal knows where you were born and when, with the last four digits of your Social Security number, they can pretty much figure out the other digits.
Oh, that's pretty troubling.
It is troubling, isn't it? So
it sure is.
But the good news is you figured out almost immediately that you had been scammed by a con artist, and you're able to really shut this thing down very quickly. By doing that, I'm hoping, knocking on wood, that you will keep any harm happening to you financially. Our number is 877-87-CLARK. Greg is with us. Hi, Greg. How are you?
I'm doing pretty good so far.
Greg, how can I be of service?
The other day I had heard a lady call in. She had received an email from a friend in Europe that needed $3,000 cash.
Yes.
And the thing that threw her was her friend's name was spelled right.
It was spelled wrong.
Oh, well, it had her friend's name on there.
Yeah.
A lot of times people forward emails and they send it to a bunch of people at one time. The email addresses actually show up on those. So if somehow it got to somebody that wanted to scam, there's an email address with a name.
So you think that I was looking for something that was more difficult. You're saying it's completely obvious how that email address would fall into the hands of the wrong person.
Yep. Whenever I forward to a lot of people, I use the BCC line, the blind carbon copy.
Yeah.
Their address will not address and name will not show up on any emails.
And let's say you have something that someone has sent to you and it's got like 50 receivers, and you want to send back a response to all those people. How do you do that where you would hide all those addresses when they're already there embedded like that?
Once they're embedded, they're going to be there.
Oh, okay. All right. I just wanted to check that out to make sure I understood.
Yeah.
I appreciate that, Greg.
Yeah, so anytime I send out a bulk mailing, actually I do it for my church. We have a group that I send out to everybody, but I use the blind carbon copy line.
Well, I appreciate that as a suggestion. Our number is 877-87-CLARK, and Chris is with us. Chris, how are you?
Hey, how are you doing?
Great, thank you. You got an either-or question for me.
I got a question about having a SEP IRA, which I have, and I'm thinking about, can I add also a Roth as well?
You certainly may, unless you're making tons and tons and tons of money.
No, I'm not, so...
You can do that, and the SEP is such a neat thing. So you work, it's your own company, and it's just you?
Yes.
All right. One thing I will suggest that you look at, since you have excess funds and you want to do both the SEP and the Roth, have you ever heard me talk about doing the self-employed 401k?
No.
There is a new version, relatively new version of a 401k for single employee companies, if it's just you. And the self-employed 401k has, in some ways, even more flexibility than the SEP, and is an alternative for you to the SEP. The reason is that it allows you potentially to put more money aside for retirement than you could with the SEP.
Yeah, but I'm not even nearly making the maximum contribution for the SEP as it is.
Okay, all right. Well, then doing the Roth in combo is really good, and I'll tell you why I love the combo deal.
I like the idea of a non-taxable in addition account in addition to the SEP.
That is exactly what I was going to say. That really hedges your bets, where you have one retirement account that's pre-tax dollars, you have another that's post-tax dollars, and when you hit retirement, depending on what tax laws are in your situation at that time, it may change which pile of cash you pull from.
Now, can you trade just as you do in your SEP in a Roth account? You have all that variety to trade with?
Exactly. Mirror image. So if there are certain kinds of mutual funds you like to buy, or stocks, or bonds, or index funds, or whatever it is you like to buy in your SEP, you can do the same exact in your Roth account.
Uh-huh. Okay.
Okay?
That sounds great.
Well, congratulations to you, Chris. Good for you. When you have a question for me on the Clark Howard Show, go to clark.com/ask. Kristen is with us. Hi, Kristen.
Hi, Clark. How you doing?
Great, thank you, Kristen. How can I be of service to you?
Clark, I put my resume on an online resume place, and people have been looking at my resume, and a person called me asking me if I wanted a customer service job or if I would be interested in interviewing for one. And when I went into the interview, the first interview, the lady said, like, they were a union benefits insurer. I don't know what that meant or what it means today. But then I went in today, and they had like a little conference about what they do, and they basically ended up disclosing that they were in sales, and the lady giving the seminar said that they have a PR department that sends out cards and letters that seem official, like if they're for firemen or policemen or whoever. And so it gets them to open the mail, and there's a card inside that said they would be interested in buying insurance from this company.
Wow, so the whole thing is just a ruse.
Yes, it is. It's like, first of all, they didn't tell me that it was sales when he called me.
Yeah.
I didn't reach out to him. I didn't apply for his company at all.
Right.
And I thought it was a company that I actually applied for, but it wasn't.
Well, you know what you need to do with this company, don't you?
What do I need to do? Because
you need to stay. You need to stay. They want you now to pay money?
They want me to pay money to.
No, they don't. Really?
Yes, they want me to pay money to get the study guides or the information to study to pass my insurance test.
That does not compute.
Yeah, Kristen, I hear you laughing. That goes in the circular file. I'm sorry they wasted your time and built up your hopes.
You know, when you're going to buy a car, pricing information is great and necessary, but there's more to doing it than just the price. There's the actual buying experience. If you want to enjoy a better one, you should go to a TrueCar certified dealer. They're there to help you find the car that you want, and they're also what make TrueCar unique. With TrueCar, you can connect with a local certified dealer that you choose, so you can lock in a guaranteed savings off the MSRP and enjoy a totally better buying experience. And by better, they also mean faster. Over 2 million cars have already been sold to TrueCar users who have visited their TrueCar certified dealer. And there are over 11,000 TrueCar certified dealers nationwide, so it's probably pretty easy to find one near you. And check this, for a new car, average TrueCar users save $3,279 off MSRP. All right, so you're probably wondering, how do I do this? It's easy. Just go to TrueCar.com or, right there on your phone, download the TrueCar app. You can find the car you want, see the TrueCar pricing curve, which shows you what other people in your area paid for the same car, and that way you can know you're getting a good price and feel confident. Then you'll get a guaranteed savings certificate from the TrueCar certified dealer. Go to the dealer, and your guaranteed savings off MSRP will be honored, and you enjoy a quick, easy experience. How's that for car buying? So when you're ready to buy a new car, or even a used one, visit TrueCar.com or download the TrueCar app and enjoy the better car buying experience. Some features are not available in all states.
I'm so glad you've joined us on the Clark Howard Show, where it's about you learning ways to keep more of what you make. On this show, my goal is to give you the best targeted advice I can for your wallet. There are times I miss the target. There are times it gets fuzzy. Why? Because I'm just a guy and I won't do as good a job as you want from me. So I want you to give me that feedback. If you go to Clark.com and go to our community section, you'll see our message boards, and then you'll see one called Clark Stinks. You can go to Clark Stinks and post where you feel I could have served the person you heard me giving guidance to better. Or if you hear me in what we call a pod at the top of an hour, bottom of an hour, and you hear an opinion from me where I'm trying to give guidance and overview advice, and you feel like I missed the mark, go to Clark Stinks and post there and let me know, because we all learn from each other, and you make me better at what I do. Once a week, our executive producer, Krista, goes through your posts on Clark Stinks, and you get to hear them right here, right now.
I should have never encouraged you to speak.
You must think I'm pretty stupid.
You should be ashamed of yourself.
Well, maybe I'm wrong. Maybe I'm wrong.
Maybe you're right, pal.
All right, here's one about one of your girlfriends. You want to rattle off your girlfriends real quick?
Okay, Southwest, Vanguard, I guess Charles Schwab, USAA.
Okay. You hit one of them. It sounds like you should get to know one of your girlfriends, USAA, better. Not everyone is eligible to join whose parents served in the military. That parent also must be a member of USAA. Otherwise, you're out of luck. Even if you have a family member who works for USAA, they are unable to pull strings to get you in. True story.
In addition, USAA, I am a proud member of my state guard, and I've been in almost 15 years. And state guardsmen around the United States are not eligible for USAA membership. But it is true, you have to start the family string with the person who served in the military joining USAA. Krista, you were telling me your dad, who served, which branch of the military was your dad in?
Army,
and thank him for his service to our country, has never joined USAA, which has made you and your sister ineligible, has made your kids ineligible.
You're going to have to nag them.
Yeah, you got to do it. And what's funny is your dad is with one of the mediocre insurers and recently had a terrible problem with them. And he still hadn't joined USAA. And look at the harm he's bringing to his daughters.
Sing it, man. Hi, Clark. You mentioned in a previous episode that you rely on Yelp for recommendations to restaurants and other venues when you travel. I wonder if you understand their corrupt and inaccurate method of displaying reviews. I'm a GM for a small home services company. We have hundreds of legitimate 5-star reviews with other review websites. However, Yelp has my company rated at 1.5 stars. There were 3 reviews from 2012 and 2013. Since we don't pay them for advertising, Yelp hides our more recent 35-plus 4- and 5-star reviews under the Other Reviews Not Recommended section of the Yelp page. The hyperlinked lettering is grayed out and difficult for a consumer to find. Another problem is that these good reviews are not reflected in the star rating that shows under our name in a Google search, so it looks like we are a horrible service provider. I contacted a sales rep to discuss advertising and felt like I was speaking to the mafia. If I pay $600 a month, a 1-year contract, our reviews will begin to be recommended and will reflect in our star rating. Please search Yelp extortion on the web to find more info. I'd be happy to provide you with our company name if you'd like to research. We've been around since 1991, and customer service is our #1 priority. And then they say, please reconsider the way you search for good restaurants and other businesses while you travel.
I appreciate this. This has been an issue with Yelp for years, and I have become more aware of how Yelp is posting reviews. There's just too much smoke here. There must be some fire with the number of problems that have been going on with Yelp, and maybe Yelp is engaging in some level, your word was extortion, of manipulation, of whatever. And if Yelp continues to undermine people's confidence in it, it will no longer be relevant in the marketplace. So, yes, I'll tell you, when I look at Yelp, I actually dig into the reviews themselves and read the reviews, and it is a problem with how Yelp chooses to position things, no doubt.
Clark said how great the lobster is somewhere. On the same show, he mentioned how he couldn't handle excessive heat at a fireman's training place. These poor sea rats are cooked alive. Sometimes you can hear them scream. My opinion of Clark is very low in this moment. There's no way to make animal abuse funny. Awareness.
Thank you. And the story you were referring to was when I do television, and there was a story I did about fire safety. And I was in a fire training center, and I was in all the firefighter gear, and I got a newfound respect. I already did have great gratitude to firefighters, but after being in the training center and being in that heat of the fire, the intense fire, wow. As for whether lobsters suffer or not, I'm not really savvy on that, and if you want me to, I'll read and see if really they are in some way suffering when they're prepared for me.
Clark, sorry. Okay. Clark, you don't stink, but your counterpoint spokesperson who you had on discussing why coal is a good thing sure did. I was amazed that you did not push back harder against his claims that wind and solar were unreliable and therefore welfare energy. The peak demand for electricity is to serve air conditioning, and at those times happens to be on hot, sunny days when solar energy is the most reliable. The total number of fuel-burning power plants that needs to be built set by what is required to meet the peak demand. For every megawatt of solar that is generated, a megawatt of carbon-burning power plant that does not need to be built. While there are counterpoints to be made in favor of burning fossil fuels, your guess sure did stink.
All right, so let me give you the background on that. There have been any of a number of people who have worked as coal miners, who work for coal mining companies, who have been very, very upset with me over the years because I call coal dirty, rotten, stinking coal. And I think it's terribly harmful. It served a very good purpose at a different era. Technology has advanced, and coal is just flat out harmful. Kills people, shortens people's lives, causes asthma, all the things I've said in the past. But what I've always said with something like that is that if someone from the industry wishes to come on the air, I want to let them on the air, and I don't want to do a debate in a situation like that. I have been so one-sided And it's one of those areas where, you know how we all have blinders on, we all have our own built-in biases and prejudices? Well, I am very heavily biased against coal. So in that segment, if you heard it, you could tell the gentleman who was on with me was furious at me. He was so angry. I mean, it was like venom was coming out of his mouth as he was speaking. But I wanted him to have his say, and I did not get into a debate. I wanted him to have the floor. So you heard him. You've made your own judgments and your own decisions. The reality is that it doesn't matter what I say or what he said. The marketplace is what's saying what needs to be said. And that is, other than corrupt influences and interferences in the marketplace, alternative energies are taking over. Whether it's natural gas, it's wind, it's solar, or other things that we haven't even discussed. The sources of energy are rapidly changing. And the only way that that doesn't happen quickly is because of political and economic interference. When I say political and economic, I mean when the politicians throw up economic roadblocks through regulation or legislation to slow down progress and change.
On a recent podcast, I heard you congratulating Joel on his financial success while driving a very old Nissan Altima that he recently sold. The 2006 and older Altima models had poor side crash ratings. It was also likely missing electronic stability control, which cuts the rate of single-car crashes in half and the risk of fatal rollover crashes. Does it really make financial sense to cheap out on an auto safety? A person should not buy more car than they can afford, but they should also own a vehicle that fits in their budget that has good safety ratings with proven technology that saves lives.
Joel?
I probably should have been driving something safer.
So you agree with the post. So this is a Joel Stinks?
I mean, I probably should have been driving something safer. I'm not saying that, like, it would have influenced my decision when I bought it when I was early 20s. So sometimes you need a $2,000 car.
How about in Bangkok staying in that $17 hotel?
That was a bad choice, too.
Yeah. So we all when we're thrifty, there are always things that we make decisions that on hindsight or reflection, it's maybe, And with the cars, what Consumer Reports has told me at their car test track is that there are certain check marks that you want to make sure a car has. And as long as it has those, even if a car is older, if it has those safety features, you're okay. Electronic stability control, as the poster mentioned, very, very important. The Insurance Institute for Highway Safety safety ratings in terms of collision impact, those are very important to me. But you could get a 2016 or 2017 car, and it could do badly in the Insurance Institute for Highway Safety ratings in terms of side impact and all that. So the year is not necessarily the most important factor. The safety features themselves are what really matter.
A recent caller had changed employers and asked Clark about rolling over his 401k from the old to the new employer. He told Clark that the old employer said the caller had net unrealized appreciation in his 401k, and Clark chuckled that they just used an unnecessarily fancy term for the increased value of the investments. Actually, the employer may have given the caller a heads up that he could take advantage of a special net unrealized appreciation tax break that may give him more money than he would get from just rolling over to the 401k. The caller should probably consult a CPA who specializes in taxes before taking any action.
Did the poster say, was that specifically referring to company stock inside a 401k?
They didn't say.
Okay, I'm going to guess, and I'm playing a game of educated guess here. All right, so if you have company stock inside a 401k, I'm so glad the poster wrote this post, and I may be missing their point, but there's another one. I think this is the point they were making. There is a direct benefit when you have company stock in a 401k to look at the alternative. There's a special procedure where that stock can be segregated and handled separately from the remainder of the 401k, and the advice to consult a CPA or an enrolled agent is absolutely exactly right in that circumstance.
Clark, the birthday Grinch Howard. What is it that you have against birthdays? Everything that is tedious and monotonous, Clark suggests you just do it on your birthday once a year. I'm guessing the typical birthday for your son is a morning filled with reviewing his free annual credit reports, followed by a meticulous video documentation of all his toys for insurance purposes. Things get more exciting in the afternoon when he goes to make a small purchase on a credit card to keep the line of credit active, followed by reshopping his insurance rates. Once all of that is finally out of the way, he is free to spend the rest of the afternoon skateboarding without a helmet. Start suggesting a better day for these terrible tasks. What do people even celebrate on Columbus Day or President's Day? These seem like perfect times for doing all of these awful once-a-year tasks. Birthdays should be fun, not even more stressful than they already are. Love the show. Keep up all the great advice, Micah.
Micah, that is so fun. Thank you. I love that. That's great. So, yes, I need to come up with another mathematical formula, another date other than your birthday to get all those housekeeping kind of chores done. Appreciate your post. I appreciate everybody's post. Please give me the feedback. Give me the guidance. It helps me so much at trying to serve you better. Mary is with us on the Clark Howard Show. Hi, Mary.
Hey, hi, Clark. I'm so excited to talk to you.
Well, I'm glad to have you here. You have a tip for your fellow listener about something that's come up on the show involving roadside assistance or towing.
Yeah, because I heard you recently about that, and I said, you know what? I've had mine for as long as I have my cell phone. I do it through my phone company, and we are only paying $2.99 a month. Which is, I build it to the, because I had 4 kids. We got 5 phones on my cell phone, and $2.99 a month. And I'm one of my son. He probably used it like 3 times a year because he had a car that was in. This is a kid that's born in '92, and he was. This car is in '85.
Wow. That is a very interesting thought. So you pay $36 a year is all you pay for roadside assistance from your cell phone carrier.
From my cell phone, and whenever you use it, it doesn't really reflect on your in your insurance, so they don't know if you call the towing company or not.
Well, you were so sweet to call in with that idea, Mary, because for people who did not hear this before, it was shocking that auto insurers, if you get optional towing or roadside assistance from them, and you call for a tow or a jump start or whatever, that they're going to ruin you in the auto insurance industry database, and you're a marked person for 3 to 5 years with huge surcharges, and you can't leave your insurer without paying huge premiums. So no one should ever get roadside assistance from their auto insurer for that reason. And your suggestion is a great one because that's very inexpensive. Now, do you pay the 36 times 5 or is it 36? Yeah. Okay. That's not necessarily as cheap as I thought you were going to say, but especially for one individual paying the 36 a year to your cell phone carrier, that's great. And thank you, Mary, for taking the time to share that.
Stay tuned for 60 seconds of AP News headlines right after this podcast.
I'm glad you're with us on the Clark Howard Show, where it's all about you learning ways to keep more of what you make. My mom passed away recently, and we found an insurance policy that we did not even know existed. And I want you to know that is a very common occurrence all across America. You want information from me, generally go to Clark.com. You got a question for me, Clark.com/ask. And with this insurance policy, the way we found it was by going through old records of my mom. And we were lucky because billions and billions and billions of dollars in life insurance policies are going unclaimed and unpaid to families that may need the money, and the individual had the insurance, went to his or her death, without telling anybody the policy was there, or it was bought so long ago nobody remembers. The insurance industry has faced legal actions around the country, laws that have been passed in a number of states because of something that's despicable. Okay, so here's the thing. Insurance companies also do things like annuities, things that are living benefits, that when somebody dies, they immediately want to stop paying. So there's a database that they check of people who've died so they can immediately stop paying. But they also know by checking that database when somebody who has a life insurance policy with them has died. Well, most insurers have taken a position that, hey, people don't know, we're not going to tell them. And the insurers have stolen billions and billions and billions of dollars from people that are owed on life insurance policies. So first things first, if you own a life insurance policy for the benefit of a loved one, a family member, please put that information in writing about who the policy is with, what it's worth, with the policy number, so that your family members, and put it somewhere that it'll be found so they can make a claim, because who knows, your state may not have gotten off its rear end to do anything about forcing insurers to do the right thing. And you could end up with money that you want other people to benefit from that they never get. I can't believe insurers would do stuff like this. But the best guess so far is approaching $10 billion that insurers have stolen from families. Somewhere near that. Disgusting, right? All right, so if you've had somebody who's died and you want to go on a hunt, there's a way you can research policies over the last 20 years, have been issued in the last 20 years. And it's through the Medical Information Bureau. Have you ever heard me talk about them? They're the ones that have the dossiers on you that insurers use to either deny you coverage or to charge you more for life insurance and allied kind of products. They have a database that it'll cost you $75, but you'll be able to search a 20-year cycle of policies that have been bought. If you go to MIB.com, if you think there's any possibility that a loved one died with insurance, what you have to lose is $75 if you're wrong, but you get the money if you're right. Teresa's with us on the Clark Howard Show. Hi, Teresa. How are you?
Hi, Clark. How are you?
Wonderful, thank you. How can I serve you, Teresa?
Well, Clark, I am in a position that I would like to work from home, and I've been seeing a lot of ads for customer service reps to work at home. I mean, a lot of ads. They ask for a fee to do a background check, which sounds reasonable, but it kind of scares me because there's so many companies that are advertising for reps, and I just want to know what is the legitimacy of that.
All right, so one thing I want to point out, and maybe the sites you've looked at have been honest about it, you're not going to earn a great deal of money doing this.
Uh-huh.
Are they telling you somewhere $8 to $12 an hour?
A few of them, that's what I saw, and I am looking for something to supplement. My husband is a business owner, and so this would be a supplement. I was previously employed, but we relocated from one state to another, and I wasn't able to transfer my job.
All right, well, gosh, that brings something to mind right away. The skills that you had with your prior employer, are they skills that you might make yourself available to a company that has similar kind of work that you could draw on the experience you already have that would make you stand out as someone who might qualify for a higher hourly rate doing what you already know how to do for your convenience and for convenience of an employer where you've moved?
Well, to be honest, I was in the hospitality industry for 4 years when I transferred with my husband to a different state. and I'm really not interested in getting back into that industry per se.
Well, that makes it simple, doesn't it?
Yeah.
All right, well, let me tell you what I've got for you.
Okay.
At my website at clark.com, we have, Teresa, a work-at-home guide with a number of organizations that, as best we've been able to determine, knock on wood, we haven't had anybody ripped off that I can recall, even though we've had this up for years. You can see work-at-homes that we believe are completely on the up and up and legit. And we have now on it more organizations than we ever have had. We have about 20 now. Mm-hmm. And I think that the odds are in your favor that none of these are going to take advantage of you.
Is it reasonable to expect to get the credit check fee reimbursed?
No, usually if they have some kind of fee to run a background on you, that's a fee you're going to pay, and I don't think you get that back.
Okay.
So
I know in the hospitality industry they require it, but you do get it back. So I just didn't know if it was an industry thing or is that, across the board.
Well, no, it is not a standard thing, because with a lot of these organizations that we have on our work-at-home guide, you choose how much or how little you're going to work. Mm-hmm. So them running background on you is an expense that they don't know they're going to recover based on how little or much you might work.
I see. Okay. Okay, Clark. Well, I did see your list, and I will check into that particular list.
Okay, and best to you. And the hospitality industry was not hospitable to you, I gather.
Well, it's just the hours are so erratic.
Aren't they?
Yes, and I am an over 55 person, and I just don't care to work those kind of hours anymore.
All right. Well, you set your own hours with a lot of these people we have listed on our work-at-home guide. I hope you find one that's a good home for you to score some extra cash. Best to you and your husband. Betty is with us on the Clark Howard Show. Hello, Betty.
Hi, Clark. Thanks for taking my phone call.
It is my pleasure. We're going to talk about Susie Orman, I understand.
I wasn't going to mention her name in the phone call, but basically I'm trying to help my 24-year-old nephew get on the right financial track. It's never too early. And so last year I helped him open a Roth IRA targeted retirement fund for 2055 with Vanguard.
Well, you are one wonderful person to get that path going. You said 23?
He's 24 now, but he opened it last year. And so, and I was all gung-ho on it. I see how you recommend it highly, but then I've heard Susie Orman, and maybe I've even seen or heard others say they're not big fans of targeted retirement funds. So I really wanted your input to make sure that, am I putting him on a too conservative track? Or
Definitely not. As an example, I'm looking at the 2060, which is slightly different mix than you said 2055.
Correct.
But it's roughly 2/3 total U.S. stock market, about a fourth international stock markets, then a little bit of bond exposure. So it is the right kind of mix for a 24-year-old.
Okay,
and it is what he should be doing. The target retirement funds burned some people last decade when the stock market fell apart, and people who didn't stay in got burned. Some of the target retirement funds that were 2010, 2015 were not conservative enough. After the stock market fell apart and they realized that it caused so much panic in people, the portfolios became more conservative than they had originally been designed for people nearing retirement. But in the case of a 24-year-old, he wants to be overwhelmingly domestic and foreign stock.
Okay.
And being in Vanguard, what's known as the expense ratio.
Right. I saw that that's real. In fact, that is the reason that he and I chose that, because it was so small.
It's less than 1/5 of 1% per year for them to manage his money. that's like free.
Yeah, that was the good part. And one final thing, what percent of his salary would you say should be going into a Roth IRA?
Let's see, whatever $5,500 would represent.
Oh, you're saying put the max in no matter what?
Yes, I do, because he does that at 24. And he does it at 25. He does it at 26. He does that in his 20s.
Mm-hmm.
It creates an entirely different future for him because the money has so many times it can double over a working lifetime by getting the money in there so young.
Okay, so he's going to have to work on that.
That's right. And you're so good to encourage this because I had somebody just yesterday say to me on the air, yeah, I really didn't get to this investing thing early enough. I didn't do it till I was 30. And I was smiling because most people don't focus on it till after their 40th birthday.
Yeah.
So doing this at 23 years old, now 24, changes his future.
Yeah, well, I'm going to keep encouraging him and get him to do that.
And I don't know specifically why Susie Orman doesn't like target retirement funds, but I think they're a great choice for people who want to set and forget and have the fund manager change the mix of investments over the years. And with Vanguard, it's hard to get any lower cost than Vanguard. Susan is with us on the Clark Howard Show. Susan, I have upset you with calling annuities a cuss word, that we don't say that word with small children listening to our show.
Hi, Clark.
Is that right, Susan?
Yes, you do upset me, but I also believe 100% in what you talk about. I've listened to you for years. I represent a company that's very unique. It's a 37-year-old company that believes along your line, buy term only and invest the difference. We can invest as little as $25 to $50 a month opening accounts, which I don't believe any other company can do.
Very unusual. That's very unusual. Almost unheard of in the investing world.
We focus on middle class. The 80% is where our company focuses on, and we do provide one variable annuity. It took a long time for us to get it written up, so it added value to our clients in specific cases.
What circumstances, from your perspective, is the variable annuity you sell something that meets decent criteria for a customer versus, let's say, doing a Roth account?
Well, we have a Roth account as well, but we like our clients to have maybe on specific clients where they can maybe invest 60% of their money into the variable. We have a guarantee of 5%. We guarantee they never have income. They have income protection. They never have a loss, and it's a guaranteed lifetime. So if they get a set amount of money and their original money runs out, they're working off another fund that guarantees them. If they're getting $20,000 a year from the fund and they get it for 20 or 30 years till they die, and they have exhausted what their original money is, they're still getting that money.
All right. Now, let me say to you, Susan, I don't have any problem at all with life annuities where someone receives a guaranteed payment for as long as they live, so they never outlive their money. But in the accumulation phase, which is when generally variable annuities are being sold to people during their key working years, my belief is that people should have their money grow more efficiently in things like Roth accounts or even index funds or index mutual funds than in variable annuities that have all the layers of expenses that I don't like for people to pay during their accumulation years. In other words, the years they're putting money in rather than taking money out.
I understand what you're saying, and I think that some of the people don't understand what it is. They just hear the thing that you don't like, variable annuity. We use mostly that where we have the guaranteed 5% or they can earn more. And it's usually we're doing it with the rollovers, the 401s, when the persons are getting closer to retirement, that they can shelter their money and then get a guaranteed lifetime. We don't want all their money in one basket. We want them to have other baskets as well to work off.
Well, Susan, I hear your passion and your belief in what you do. And if you're out there working with smaller investors that nobody else will work with, I'm so glad you're out there doing it. But I think we're going to have to agree to disagree, because I don't believe that variable annuities are appropriate for the exact situation you described, somebody transitioning out of a 401k, but still in prime working years. And I think that variable annuities have too many embedded expenses to be a good choice. But thank you for being there for the smaller saver, the smaller investor.
Thanks for listening to the Clark Howard Podcast. Download new episodes every Monday through Friday at podcastone.com. That's podcastone.com. Stay tuned for the latest AP News headlines from Podcast One right after this.
AP Update, I'm Ross Simpson. 9 people are dead after a terrorist attack on a shopping mall in Munich, Germany. Police are scheduled to hold a news conference at this hour. In the meantime, AP correspondent David Rising reports cell phone videos of the attack have surfaced.
In one of them, there's a gunman seen seeming to fire shots outside of a McDonald's. He's dressed in black. And the other has somebody also dressed in black on top of a parking garage. And somebody who appears to be the gunman says, "Ich bin Deutscher," I'm a German.
Hillary Clinton went on the attack today, less than 24 hours after Donald Trump accepted the GOP presidential nomination. Clinton says Trump expressed plenty of fear and anger, but no solutions.
Instead, I heard about Donald Trump's dark and divisive vision. Last night's speech took it to a whole new level.
We're still waiting for a text message from the Clinton campaign about her running mate. I'm Ross Simpson.